Okay, good afternoon, everybody. Today is August 12th, 2022. This is your weekly take on the market. I will be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here at Investors Business Daily. Take a moment to read the disclaimer. We are not licensed at IBD. We don't provide buy, sell, hold recommendations. Can't tell you whether to hold something, whether to sell it, whether to take profits, whether to stop yourself out. But one of the great perks of working here is being able to trade your own account, invest your own money. And a lot of us are very actively doing so. Okay, we'll talk about the market indices, then the industry groups, then a few stocks that are on my radar, and then the quote of the week. You know the drill. It's week by week, same bat channel, same stuff. All right, so let's pull up my MarketSmith chart. And we'll start with a chart of the NASDAQ. And, you know, yesterday was kind of a reversal day, but today it gained back all of that and then some. The market just doesn't want to go down. It is what it is. You can argue with it. You can call it a bear market rally. You can, you know, scream from the rooftops, but, you know, the price action is just 3 steps up, 2 steps back. You can see, you know, ever since this, you're just making a series of higher lows is the word I'm looking for. So higher lows, higher lows, higher lows. And I'm really looking forward to the first time we don't make a higher low, how that reaction is. So if we like go up here and undercut those lows and then meander and then start to go again, I think that'd be really bullish, and maybe we're the low is in. I don't know. I don't know if the low is in, and I don't need to know. I just kind of go with it, use my my risk management. If I'm making progress, I tend to put more on. If I'm not making progress, I tend to take exposure off. It's simple but not easy, right? It really is very simple, but it's not easy because, you know, it's your hard-earned money. So the Nasdaq's in an uptrend, and we'll have to see how that plays out going forward. You know, is it stretched in the short term? For sure. But a lot of, you know, I like to use Twitter, and there's some people I follow for sentiment. I don't watch TV, but they tell me that on TV, they call it a bear market rally over and over and over. So until they've stopped calling it a bear market rally, it's, you know, we're just not going to see any significant weakness. If, you know, you did get some talk that, you know, we're now in a new bull market because the NASDAQ is 20% plus off the lows. So if you want the market to go down, you want to hear a lot more talk about the fact that we're in a new bull market, because, you know, down here, nobody's telling you that it's about to be a new bull market. They always seem to tell you up here if it's going to roll over. So it's just a very dynamic, very crazy time that we live in. So, you know, if you're not fully invested, I don't blame you. But if you're sitting in cash, I think you're doing it wrong. You know, you should have some exposure, 10, 20, 30% at worst, and just see what happens, because it's an asymmetric trade. If you get it right, you're going to make 3-4 times what you risk. So not 3-4 times your money, 3-4 times what you risk, right? Every time I put $1 in the market, I'm risking roughly 5 cents. If I get it right, I might make 15, 18, 32 cents, somewhere in that range. And so it's, you know, I don't have to be right all that often. Let's go to the S&P, which is held up a little bit better because it does have more exposure to energy and cyclicals and things like that. So it's a little bit closer to the 200-day. It is 1.2% underneath it, whereas the NASDAQ is, what's that, 3.5% underneath that. So the NASDAQ has been the laggard. And, you know, NASDAQ led the charge it's you know, it's got a higher beta. It's gonna, you know, on the downside, it's gonna go down more, you know, almost always. And on the upside, it will eventually, if this is real, it'll probably go up more. But most of my exposure is not tech. And then we can get into that, though, you know, why not? But most of my exposure is energy, cyclicals, stuff like that. That I just think they've you know, it seems like that's where the bull market is. You're getting some bounce in the Apples and the Googles and Facebooks, or not really on Facebook. I don't even watch Facebook anymore. Apple, Google, Amazon, etc. But those are just kind of so far anyways, dead cat bounces, although super strong. In like Apple's 30, I think I calculated 30 some percent off the lows. So if Apple goes up 30% off the lows, and Apple is roughly 10% of the S&P, you know, that's 3% right there. And look at that, just relentless. What's that, up 9 out of 10 weeks or something like that off the lows. Amazon doesn't look as good. I think Amazon is a short sale candidate if I feel like being short. I don't really have a whole lot of desire to be short here, even though I think the market could go down, you know, in the short term. It's always could. It feels stretched, but I you know, I have one single short, and I just kind of keep it on as proof that I don't want to be short, because it's just like brutal to be short, even a single name with small exposure. Let's go back to the slides. So I apologize. I know this is a little blurry, but I took it from a newsletter, and when I copied it and tried to expand it, it just didn't copy very well. But it's, you know, you get the idea. In 2000, the 5 largest stocks, Microsoft, Cisco, GE, Exxon, and Intel, peaked at 18% of the S&P. I think it was last year, or maybe even late 2020. The FANGs, Facebook, Amazon, Apple, Microsoft, Google, peaked at 25% weighting. Currently, they're around 21%, so they're still huge weighting on the S&P. I guess if I have to make a kind of a macro large market guess, I think they're going to underperform for a lot of years, just like this chart says. If you look at in 2000, Microsoft, you know, has turned out to be gangbusters. Exxon, I would guess Exxon's done okay in that period of time, not as good as Microsoft, of course. Intel has been a turkey, and GE is super turkey. And Cisco is probably just kind of, you know, a dividend, a 2%er for years and years. So you might get Apple to keep going up, or Google to keep going up. I don't know, but I think as a general rule, owning all of these will be an underperformer going forward. It's just an economies of scale. It's like, you know, you can only be so big. The weightings in the S&P, Apple is 7% of the S&P. I thought I read that it might even be higher, but it's, I think somebody wrote that it's the highest weighting for a single stock since 1980 or something like that. So the S&P is just like, it's Apple. It's like Apple, as Apple goes, so goes the S&P. But you can see you've got Apple, Microsoft, Amazon, Tesla, and I just took the top 4, and you're looking at 13, 16, you know, 20% of the index in just 4 names. So they really are going to move the markets. This is interesting, the percentage of world banks that are hiking rates from Lombard. The source is BIS. The Daily Shot, which is a really cool newsletter. I like Daily Shot because it's just all, well, it's not all charts, but I really like charts of everything, because, you know, I guess you can adjust a chart, you can play with the scaling and all that and try to tell the story as best you can. But from a pure, you know, opinion standpoint, a chart is much better than words, because it, you know, it tells a story just visually. So you can see It's been an incredible hiking cycle straight up. Now, the market so far has handled that pretty good. When I say the market, I mean the overall broad market. The average stock has gotten torched in the last, 18 months, of course. Some of them are coming off the lows really fast, but there's a lot of stocks down 50, 60, 70, 80%. You can see in 1995, I remember when I first got in the business, late 94, there was like a little mini bear market. I remember the Fed was hiking. I didn't really know what all of that meant. I just knew that, stocks I was buying were going down. And, but then you could see the reversal, right? See that bad breakdown. And that was a, start of a really good bull market. And then in 06, 07, into the teeth of what became the financial crisis, hiking. And then they broke down again. And then this little spike over here was the taper tantrum, why the Fed tried to raise rates and just found out they couldn't. You had the Christmas Day massacre. So, interest rates, they really matter to the stock market. It's kind of the grease of the market, the lifeblood of the market, the liquidity that makes the market okay. So if the Fed just keeps hiking and rates go higher and higher, it's going to be really difficult for the market not to go down. It just is what it is. It's going to have a hard time not going down because of that. But if the Fed and everybody else, if they just stop or pause, then maybe the market can go up. It seems unlikely that they would do any cutting of rates, like you saw in those previous ones. At least as we sit here today, I know the market thinks going forward they might cut rates, sometime in 23. I don't know. It's just too far for me to even speculate. I'm more worried about what's going to happen Monday versus 2023. But just maybe if a pause could be enough for the market. But, if you want some kind of explanation, a lot of people like the why. Why did the market go down? Well, this is why. This is why right here. Rates just skyrocketed. All right, so let's go to the industry groups. And let's sort them. Energy solar is still number 1. Oil, gas, royalty trust is 2. Biotech is still 3. Telecom, fiber optics, there's only 9 stocks. That Clearfield, I think, has really made a big move. That's 4. Retail super mini markets. Let's go ahead and pull this all the way up so you can see a little better. Telecom infrastructure, 3 months ago it was 137. Now it's what? I apologize. I ranked this wrong. I want the current industry group rank, not last week. Telecom, media periodicals, medical systems, but the groups are a little bit better. There's more potential stuff in the groups. Energy it's not dominated by energy like it once was before, but a good exercise, medical system equipments, 109, 17.9. You probably should dig into that group. Double click the group name and kind of see the group as a whole is coming off the bottom. Open up the panel over here. Let's choose stocks and group. There's Intuitive Surgical, IDXX. And then if you want to review the group, click on this button, show all component data. HAE is the very first stock. Why is it first? Well, the EPS and RS rating combination is the largest of the group. Add those two numbers together. IRMD is second, 9682. SRTS is third. Shockwave, that's just been incredible stock. So you can dig in and get some ideas like that potentially. Let's go to Shockwave. That was going to be, and I'm going to turn off my camera because some people say you can't see the charts with my camera. So I don't know if I'm moving this around, if that's working, but I'm going to turn off my camera. I have the charts open and see if that gives you a better view of the stocks. And Shockwave reported earnings and they were gangbusters, 999%. This stock's frustrating because I remember here I had a huge position because it was amazing. I really loved what they did. It just made sense to me. It's really nice when you can dig in and understand the products and services. Just gives you much better conviction. But like a lot of IPOs, blew up. And then it started to come back and came back on my radar. The problem for me, not the problem for the stock, my personal problem was it never built a base. So, I bought it there, I bought it there. But I just, I'm over here hoping for some base, and it just never built a base. Sometimes it's not going to build a base. If you like the name, you might have to just find a way to buy it. And that was my problem in here. I just couldn't figure out how to buy it. And now it's just so much higher. It's like, just buy it, buy 100 shares if that's what it takes. Just have a position in it is my personal recommendation to myself. LNTH, same thing, a little bit better, but just kind of difficult to buy. Look at all these bars. The bars are it's just really choppy, the bars. Up, down, just look at here and here. That's a personal problem. Stock's going to do what it's going to do. If I have the right stop, I could survive it, but you can see I have this trend line drawn and it's going to hit that. I just know it. And that was how I planned to sell that stock, was into that uptrend line. And it's, my plan will play out for sure. I just know it, but I'm not there to participate because I just couldn't handle the way it traded. Stocks, PBR. I know I mentioned this on IBD Live last Monday. Acting great. What a day today, to be honest with you. Now, they did a dividend. I think it's $2.50 was the dividend. So if we go back, you'll see when I bought the stock, it was around 13 and high 13s, 1390, 1410. I think I paid somewhere in there. I bought it a couple of days in a row here. But then when they do an unusually large dividend, you can see it breaks out, runs up. It's at 1550 one day. And yesterday it was down to 1509. And now it's up to 1362. How can that happen? Because we've adjusted it for the $2.50 dividend. I didn't get the dividend yet, but hopefully it'll show up in my account next few days. Now, my account was down a lot today. It was like, because I'm waiting for the, $2.50 times the number of shares I had show up. But then the stock came back, acted incredibly well. So it worked out way better than I could have expected. I really thought I would capture, $2 of the dividend, 50 cents of the dividend, something of it, but so far so good. So I'm keeping it. We'll see what happens. Let's go to the weekly. I just think it's in the right group. And like I mentioned on IBD Live, owners and funds. Look at the change. This is cool, the delta from Contra. So in December, he started a position, 1.37 million shares. In March, he really loaded it. Went all the way to 7 3/4. And then by June, he had 9 million shares. He's been increasing his position every quarter. That really gave me the conviction to go with this trade. So now I've got the dividend and, ignoring the dividend, I own it somewhere in here. And now I just, I'll handle it like any other stock is the goal. But that's the reason why, the stock is up, but like Thinkorswim or somebody else might say the stock is down because we adjust the charts for the dividend. Zim was an example of, see these unusually large dividends, 5%, 24%, because the way Bill wanted, he didn't want the chart to show all these gaps if there was an unusual dividend. And if we didn't change PBR, it would look like it gapped down from 15 to 1362. which it did. Some services might show it that way, but the dividend that I'll receive in the next few days will fill in that hole, so to speak. So it's not really like I lost, that move down. So that's why we've done that historically. CMC, commercial metal process fabrication, breaking out of a double bottom. Let's go to the weekly chart. RS line new high. 1, 2, 3, 4, 5, 6 weeks in a row. EPS rating 99. Another, it's just, there's just ideas galore. On semi, 1, 2, 3, 4, 5, 6 weeks in a row. Look at the last few quarters. Proprietary ratings, another idea. Not as good technically, GFS, but so strong. 1, 2, 3, 4, 5, 6 weeks in a row. Last quarter, very good. And this looks like a double bottom to me. I don't own GFS. I own the others that I mentioned, but I want to own GFS. It's just a matter of where, how am I going to enter it? But I think there's some type of pivot like right there. So I didn't buy it today. It was kind of sleep at the wheel. I was, I don't know. I was just doing something. All of a sudden I saw stock was up 6. So I wasn't going to chase it, but there's just so many ideas. Shipping has just been incredible. Here's TNK, TRMD, which I exited today finally, but great move. Sting, which I messed up, but has been a great move. Frontline, it's kind of lower quality, I would say, just because it hasn't quite moved like the others, but maybe it does play catch up. GLNG, I don't own this one. Unfortunately, I should have been buying it right there. Regardless, right there was the buy point. And the only reason I didn't is because I have a huge position in FLNG. But so what? I've had more exposure in a single group before than I have with FLNG. So I dropped the ball on GLNG. But this one, acting like a champ. So there's stuff out there that's holding up. That's giving you buy points. What else? Is there anything else that broke out? I know I've been getting so many alerts. There was like there was an Indian bank, I think today. Was it? Here, why am I why don't I just go to the bell? IBN broke out right near the close. It's an Indian bank. I don't know much about an Indian bank. Would I buy an Indian bank? I think I've bought this before. I didn't make any money or do anything with it. But it just feels like the market's better. EW, is it HJ? Is that? No, it's HEWJ, hedged. So, Japanese market looks like, huge base, gone nowhere for a long time. Maybe this is a breakout, start of a new uptrend. This is hedged, 2.2% is the yield. If you're, if you feel like the market's extended, well, maybe in the short term, but there's a lot of stuff that's not extended. Here's emerging markets, 5% yield, gone nowhere forever. Look at this. This is in local currency, so I assume that means it's hedged, but it's, it hasn't made a new high for 10 years. 10 years. When's the last time Japan made a new high? 1989, I think. So, there's areas where you can, be invested if you want to be, if you're flexible. Oh, I know the other areas I want to talk. The Matador broke out. That was one that broke out of a cup with handle. Here's Antoro Resources. Now, this looks like a cup with handle to me, but maybe it's too short. That's possible, but there's another name. This whole group, if you go to the weekly, just littered with ideas. So there's stuff out there for sure. Okay. Last but not least, any other stocks that I wanted to? Oh, I think there was a driller that looks. I like Valaris again. So maybe it's a pet stock, but because I've made money in it before, buying here, and it looks like it's forming a base as well. See what the daily says. No, it looks a little bit like an AR, right? This ascending base didn't work. It would have stopped you out. In fact, I did get stopped. I did buy it. It's at ascending base. But another idea in the, it's in the energy area. So, but a lot of the performance, the market you can't really see it, but 22 to 34, UPST is up 50% off the lows. Affirm is more than doubled off the lows. What else is just gone bananas? Space, no. DraftKings. I wonder what's moving ARK, because ARK is, I think I calculated 50% off the lows, 36 to 52, 44% roughly. So when they go down so much, it's tempting because, small rallies can be really big, 50% if you happen to catch, at or near the low or even 40% in ARK is a lot. You can, so that's what's tempting. That's why people like to buy stocks that are down a lot, because if you get it right, they go up a lot. And this is what's driving the overall market, driving the indexes. A lot of these stocks are coming back off the lows, and that will move the indexes. So the jury is still out on the indexes. We'll see what happens. Last but not least, let's go to the quote of the week. Do I have two quotes? I might have two quotes. Did I move one of them? What I'll do a lot is if I see something that I like, I'll move it into the folder, and then I have a few options. Oh, I like that one. This plays out to kind of where we are in the market at this very moment. Nobody can predict the future. Anything can happen. Anything can happen in the stock market. If you don't believe that, I want you to pull up some charts this weekend, like HKD, which was an IPO at 7 and went to 2,500. 7 to 2,500. So if you don't think anything can happen in the stock market, you need to be trained psychologically to know. If you believe if you have the imagination that anything can happen, Netflix can go down 80%. Apple can go down 80%. I'm not saying it's going to, it can. What else? UPST, Affirm, the downside and upside. Tesla can go up 20-fold. People that made huge money in Teslas because they believed that could happen. So if you have that mentality that anything can happen, you have such an advantage over everyone else, because you're open to the possibilities that if I'm in something that's going down, you are aware it could go down a lot. I better protect myself. And if you're in something that's going up, you say, you know what? I think maybe this could go up a lot. It could go up a lot, and you have a chance to capture that. It's not going to happen each time. They're not going to go down 80% each time or go up ridiculous each time like HKD, but you're open to those possibilities. And that's what I like about the quote from Tony Robbins. Obviously, he's not talking about stock market, but it does apply. I got out of the future business. I was much happier. I got into the possibility business. This made me a lot more successful. Leave the future business for the possibility business, and the world will get infinitely larger. So you don't have to predict the future to make money in the stock market. You do not. You just have to learn to go with it. Nobody is predicting the future. If they get it, honestly, they just got lucky. It's okay. We all get lucky. We all get unlucky. It's just part of life. But no one is going to consistently tell you, oh, the market's going to go here, and then the market's going to go there, and then the market's going to go here. It's just not possible. So be open to the fact, as we sit here today, that it's possible that the market made a low. If you don't have that mindset, think about what your mindset is, where you're at. Are you bearish or are you uber bullish? Because we all have biases and they will influence you. There's no way to get rid of them, I don't believe. But the key is to understand those biases and be aware of those biases. Like for myself, I'm aware that at the lows, historically, I'm always uber bearish, always. I've been uber bearish at every low. Now, sometimes those lows became more lows, like 08. I was uber bearish at every, low that became another lower low further down the road. But ultimately, there was a low, and I was uber bearish there. So I'm aware of that, and I use that to my advantage, whether it's if I'm short, I reduce my exposure very quickly. I put on a single long sometimes reluctantly, just assuming it's going to go down a lot. Like now, I really don't like the short side right here, but I have a single short just to explore that possibility. And if you're uber bullish, then you want to explore the possibility that the market could make another low and a whole nother leg down. And the market could go down 50, 60, 80%. I know the odds are super low that can happen, but not zero. It's happened before. The NASDAQ went down 89%, I think, in the 2000 to 2003 bear market. All right. Contact information, marcusmith@investors.com, 800-424-9033. Hopefully me turning off the camera worked. You guys could see the charts better. This is an experiment. Honestly, I know one of my friends was telling me that he really enjoyed my take on the market, and he's a friend of mine, so I took it with a grain of salt. But I tell him, I like it too, and it keeps me on my toes. And he goes, "What are you going to talk about today?" This is earlier this morning. And I said, honestly, I don't know. I don't know what stocks I'm going to talk about. I know what I'm going to say. He goes, "Really?" He goes, you don't prepare? I said, "No, I don't. I don't prepare like a speech or anything like that." So it is free form, good, bad, or indifferent. So I appreciate the feedback, get lots of feedback. Most of it is good. Some of it is, you did this wrong, Scott, or you do that wrong, or somebody emailed about the camera. And I'm open to all feedback. I'm open to all the possibilities of getting this better and providing more value add if possible, for sure. All right, everyone. Thank you very much. MarcusSmith@investors.com, 800-424-9033. Have a great weekend. Bye-bye.